I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms. Good afternoon, everyone. Welcome to the recap. I'm Laz, and I'm here to take you through a little bit of the day that was. And before we get into the market, I think it's important that we look at the market from all different angles. We're going to zoom in, we're going to zoom out. We're going to take a sort of a broad stroke, and then we're going to look at the actual near term. So we're going to get hopefully a very good working functional picture of what's happening in this market, and moreover, again, how to analyze risk, which I think is paramount for every trader. For those that have been through our education, our active trading course, you know that we teach how to maneuver the markets with the scope of how to analyze risk. And that's really ultimately what I want to do here for the next, while I have your attention for the next few minutes, is I want to look at the market and I want to actually, go through it, and we can sort of talk about storytelling. And I think that all good traders are essentially good storytellers. And we're using price, essentially as that story, how to analyze the movement of price so we can determine what the story is and what the potential next steps of that story are. So let's take a look here at the S&Ps. We're going to look at the SPYs. One of my favorite ETFs, and what I have here on the screen is a weekly chart. And this goes back, through 2011, through 2012, and currently where we are, way up here in late February 2013. So the theme here that we've seen in the market for the better part of the last year and a half is, rally, pull back, rally, new high, make new highs, pull back, rally, new highs. And I think, potentially what could happen here is a little bit of a pullback. How far this goes, remains to be seen. I mean, we could pull back essentially as deep as, 140 here in the SPYs, because essentially, we can potentially retrace this whole thing. But that's not really what I want to discuss here. It's just really more about the idea that, buying new highs, as we've stated many, many times, is not a way to trade the markets. You don't buy highs and you don't sell at lows. You want to nimbly carve out buying controlled pullbacks. Well, what is a controlled pullback? A controlled pullback is literally a 3 to 5 bar consolidation. Sometimes can be a little bit more, sometimes can be a little bit less. Now, if we go up a time frame, when I say up a time frame, let's look at a bigger picture. We're going to look here at the monthly. The reason I want to look at the monthly is not because I'm interested in trading off this time frame, but because I'm interested in collecting larger macro data points. And I think that as traders, you have to be aware of, the forces that exist in this marketplace. And again, I'm highlighting those forces. This is essentially a major area of what we would call resistance. You can see that every time we get back into this, level in the market, and again, it's only been, less than a handful of times back in late 99, 2000, and again in 07, 08, we've seen some pretty substantial sellers step in here. So we need to be very careful about where we are in the evolution or the cycle of this market. We have a very interesting looking pattern that has developed here over the last couple of years. It is possible for the market to essentially pull back and test this longer term trend line. I have this basically mapped out as your 09 lows, March 09, where this move essentially bottomed. And again here back in 2011 was the end of the summer into October, where we get that strong pullback. That pullback could essentially occur here at an area of significant resistance. So what I want to do is I want to make you aware of the possible and plausible scenarios that do exist, so that as a trader, you're not caught saying, well, I didn't really see that coming. Because our job as educators and as traders is to identify all possible and probable situations. So I want to outline that a pullback here, a larger pullback into a larger trend line off of a larger time frame could be in the cards. Will that happen in one day? No, it'll happen over a series of weeks, months, what have you, as this is a monthly chart, and every candlestick represents one full month of trading activity. So this is, again, bigger picture. We look at this, we zoom in, we look at a weekly, you're going to see that same chart a little more defined. You can probably adjust your trend lines ever so slightly, so you get, the best data. But again, I want to present all possible scenarios. I also want to present, a more micro trend line, again, more intermediate term, I would consider it, where you have these, bottoming levels down here. So, I really want to make sure that you walk away from having watched this video saying, you know what, I need to consider other things. I need to make sure that I am aware of the potential risks that occur. Okay, now at market tops and bottoms, you generally see volatility. More so with market tops, because market tops develop over time, whereas bottoms happen. What I mean by that is that market tops develop over a series of days, weeks, months, what have you, whereas bottoms tend to be more V-shaped. We go down, we turn back up. Tops tend to be a lot more volatile and whippy at topping points. So I want to pop over and I want to look at the VIX, which is, again, the trader's measure of volatility. And you can see, this is a weekly VIX, but even a daily VIX, look at the spike that we've had in the volatility index here, which, again, doesn't necessarily mean anything other than volatility is increasing. You're starting to see larger ranges. When you see that, you have to expect faster movement. Stocks are going to go up faster. They're going to go down faster. They tend to have that oh my gosh syndrome where you can't believe how fast either a stock or a market has gone up or gone down. So expect an increase in the rate of volatility, the rate of speed, the rate of change from which something goes from A to B. And that can be both up or down. Generally, when you see spikes in the VIX, that is associated with sell-offs in the market. That's when that panic and that volatility sets in. So we've seen a pretty big spike here in the last couple of sessions in volatility, and I think the market will reset itself at some point. But for now, let's go back to our daily chart. Let's go back to that SPY chart. And here's the daily. You have this little bit of a rounding top pattern here, not quite fully developed, but you have this nice, topping formation. The gap up on, I believe it was Monday, which was yesterday's massive sell-off, is something we have to take into account. There is demand, or I should say actual supply here, that drove this market down, and it did it with force. We have to respect yesterday. Yesterday is a day you definitively want to respect, because it is a day where something changed. And that change, again, it may not mean that the next day you see more selling, but we have to keep an eye out for possibilities. What are the possibilities in the near term? Again, we're going to zoom in on our microscope. We're zooming in near term. Well, the possibilities exist that we get a 2 to 3 day bounce here, a little bit of a consolidation of price. Again, large expansion yesterday, followed by price contraction, which shouldn't be a surprise to anybody. Again, if you've gone through the active trader course, we talk about that expansion contraction phase where markets will expand and you'll see ranges. You'll see a stock jump out of its range into a new range, and then the price will contract, and that cycle tends to repeat itself over and over and over. So I think we need to be aware of the possibilities. Could we bounce a little bit more? Again, zoom in on the microscope. Here's a 60-minute chart. Yes, we essentially could. Let me remove some of these lines. Let's look at just, again, highs and lows. You have market highs. We essentially made a high back up here, back in 153.5. Again, just follow the short-term price action. We got a swift sell-off. We got a deep retracement, about a 786 retracement there for those fib traders, and then boom, straight down. So, you've had a nice ABC corrective move to the downside. Give this market, a chance to consolidate. What do I mean? Well, give it a chance to set back up. If we're going to go lower, what do I anticipate seeing? Well, I anticipate, some bear flag price action, shallow retracement. Again, looking at highs and lows, market highs, lows. Let's assume lows are put in. We could retrace 38, 50% here, about 150.5, even 151 in the SPYs, before, potentially legging lower. Again, we need more time to evaluate this data as it builds day by day by day. manage your expectations with what you do here. Is, again, if the volatility stays at elevated levels, I do expect faster price movements. Let's move on, as I think I covered that, as deep as I could. We're going to talk about Apple. Apple, still a weak stock, still very bearish formation. We do have to respect, levels. What do we know? We know that down here, 440, we've seen a couple touches here. Seems like 440 plus or minus is an area where, a base is trying to build. We saw today, again, it was a news story, was the catalyst, but again, popping off of that 440. Again, would I make more of this than I need to? Probably not. I'd still need to see more bullish price action for me to actually change my tune here. Here's a weekly chart, again, still bearish, but again, trying to hold that 440, plus or minus. If that gets taken out, I suspect, you might see a trade down to maybe that 400 area in the not too distant future. But again, very, very choppy in here, and I'd say that it's not the same trade that it was, even just a handful of weeks ago. If you're going to go and trade the stock, make sure you go at it with a very, very tight risk approach here. Banks. Very much like the market. When the banks broke, the market broke. This is FAS. Again, I'm using this as a financial ETF. It's highly leveraged. But again, you're seeing that same sort of powerful down surge on Monday. We saw a little bit of new lows this morning. It did take out Monday's low and then, snapping back. What does that mean? Well, I suspect we could be in for a, multi-day, maybe a 3-day to 5-day choppy consolidation type trade. Again, 50% of that big Monday sell-off, that's probably the area, if we get back above that area, we could start to leg higher again. So this is a trade where you have to be, you have to be in tune with the data. Collect your data, because that data is going to help you make smart decisions essentially about where risk is the least. Is the balance of power shifting? We talk about those bigger time frames, those weekly, monthly charts. Again, you're going to have to see the shift happen on the daily charts and the hourly charts before a shift happens on higher time frames. If we start to see a shift or a pullback happen on larger time frames, it's because those intermediate and near-term time frames are decaying. Price decay is starting to happen, and bounces essentially are being sold for new lows. So we're going to keep a very watchful eye out as the tree, as I like to say, the market, that we shook the tree. The tree got shaken pretty hard and violently yesterday. Now we need to, watch for clues about what could potentially happen next. If banks don't lead us higher, you need to ask yourself the question, what's going to drive this market back to highs? If it's not the banks, then you literally can look at maybe a handful of technology stocks. Priceline, not necessarily a catalyst for the market, gapping up on earnings. I think earnings after the bell today. And last I looked, the stock was up pretty substantial amount. You still have a stock like Google, sitting at highs, but after a multi-week, multi-month rally, is this the area where risk is the least? I would say probably not. If you're looking to buy some of these stronger names or relatively stronger names, again, look to buy controlled pullbacks into rising averages. It's probably going to be a much smarter buy than chasing highs and hoping, wishing, and praying that this that those trades go higher. So you don't want to chase this market. If you didn't participate in this rally, it's fine. Start to lower your time frames. Look for more cash flow type trades. The VTF has been an outstanding place for opportunity, both from a swing trading standpoint and a day trading standpoint. There really is a little bit of two-way action here. You're seeing some good volatility, and that volatility always creates for interesting day trading and short-term trading scenarios. That's about it. I'm out of breath. I've said my piece. Be careful with what you do at these levels. Again, the market could be setting up for a larger pullback. A little bit of time, I think, will go a long way here, especially even as little as a couple of days. As always, I'm Laz. Have a great day trading tomorrow. Make sure you tune into the VTF to get that real-time color, and I'll talk to you later.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet, at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.